these are some where you can, if you're really looking for green in the market, perhaps look at that. But let's talk about the markets. We have Anil Sarin, CIO of Centrum PMS, joining us to discuss the way forward. Anil, thanks a lot for joining us. This is Pavitra. You know, like we were pointing out, this is the way the market is looking in spite of global banks really pushing, injecting this kind of liquidity. Do you think the way things are positioned right now, there's a scope for it to get much worse from here? Or do you think we're going to be range bound at around these levels for a while?
No, I guess, I mean, we will get some indication tonight when the FOMC meeting happens. And obviously there is maximum kind of pressure. There is seldom a single cockroach, etc. All those things come to mind. But one thing is worth thinking about is that, I mean, unless the rates come down, you know, the pressure on US banks is not going to go away. And it's such a difficult decision. On the one side, you have inflation. On the other, you have a full-on kind of a run on the banks. And that run won't go away till you reduce the rate. So tonight's events will have to be watched very, very carefully.
Anil, globally, even if we just continue to see maybe one more rate hike and then a pause, and we don't see a rate cut, do things get a lot worse? What you are asking is that markets right now need a pivot from the Fed and they need rate cuts to bring down the broader collapse of the US banking system. If that doesn't play out, at best we continue to see these rates, but for longer, maybe the whole of this calendar year, then what is the impact on the markets? How bad do things get?
So, Rima, let me explain my reasoning regarding the rate cut and not about continuously going up through the year. I'm in favor of a cut because, you know, it's one thing to say we will make the depositors whole. It is one thing to say that you can sell your bond, MBS, whatever it is that you have to us at face value, etc. But that doesn't take care of the basic problem. These banks are offering very low rates, whereas depositors have an option to go treasury direct, they have an option to go to money market mutual funds and get much, much higher returns. So as long as that differential exists, no amount of assurance, no amount of backstopping is going to help. So right now, the Fed is in the horns of a dilemma, which is the greater evil. And obviously, to your point, Rima, if it continues to increase through the course of the year, then obviously markets will see a much worse situation than what we are seeing today.
Anil, hi, good morning. So I think we just have to wait and watch these events play out, right? But in the meantime, if people want to focus on their portfolios and start nibbling in because the opportunity presents itself now, how do you advise they should go about it? What would you be buying? I mean, if you do have a shopping list ready.
It has been ready. We are mostly committed. So now we just have to grit our teeth and sort of go through this turbulence. The fact remains that Indian companies are offering selectively very, very attractive kind of earnings growth. And also we keep hearing from various commentators, various leaders, how India is such a favorable destination across the world. So it's a question of going through, managing this volatility and remaining committed to this period. At the other end of this is, very, very good earnings, very good kind of outlook for the Indian stock markets. The earnings are going to be there. When the sentiment changes, it will translate into stock market gains. So we have to keep the faith. There is every reason and very sound logic for keeping the faith.
Any preferred sectors, again, just to go back to that question, for those who want to build medium-term portfolios, any preferred sectors that you'd want to highlight?
Sure. So infrastructure is one area where there is kind of visibility. Real estate also has a lot of strength. Healthcare, quite independent of everything else, is doing well. Hotels. Select technology stocks, not to be confused with IT services company, but technology-oriented digital business model kind of company. These are focused on the Indian market. So there are pockets where you should consider nibbling even under this bad market condition.
Anil, Anil, we have you on a really scratchy line, so our team is trying to fix that. But I request you to please stay on. We're just going to try to patch that connection and come back to you in. Yeah. All right, let's wait and see. Maybe the team can try to repatch that connection, and we'd love to continue that conversation. In the meantime, let's quickly take a break. We'll come back and we'll talk more on the markets. Welcome back. You're still tuned into Trading Hour here on CNBC-TV18. For the market, it's a 160-point cut that we are seeing. The banks have recovered a tad, but it is still looking like an extremely deep cut. 0.8% gone on the Nifty Bank. We were having a chat with Anil Sarin on the markets and which way we could really move from here. Anil, you were mentioning the sectors that you like. You said infrastructure is one space which could be good. Healthcare. Is there anything else that you would look at? And is there anything that you're completely avoiding? Are the global-facing names a complete no right now?
No, I think, So to add to the list, infra, construction, real estate, healthcare, hotels is another area where there is good scope. And then these recently listed digital business model companies, where the price correction has been quite a lot. And now the numbers, the operational numbers are starting to look quite good. So these are the areas where you would be, finding good outcomes if you accumulate patiently. As to avoiding, I think, global facing IT services amongst the large caps, maybe you can expect some kind of price correction given that earnings are not going to grow as much as the valuations are probably suggesting.
Amongst these digitally facing companies, there are so many, right? There is a Nykaa, there is Paytm, PB Fintech. Which ones would you prefer?
Yeah, so the leading ones, there have been others which have sort of, they didn't even open very strong, and after that, over the period of time, they have sort of kept on going down. But you have mentioned some of those, especially in the financial sector. There are those numbers which are appearing to be pretty strong, and there is a dominant position. Or whether you can look at the food delivery companies, it's a duopoly, and it's very, very difficult to sort of break in. For a third player to come in now. So patience should be rewarded over here. Obviously, you will have to watch the operation, the operating numbers very carefully. But as far as the market dominance is concerned, there is no doubt.
Okay, that is on the new age companies where perhaps they've corrected enough for it to be a comfortable position to enter. Anil, how would you look at the banks now? Because a lot of these have also corrected significantly, right? They're offered, right? Would you look at those, and within banks, then what do you like?
No, so the issue with banks is probably they are over-owned. Certain names which are sort of turning around and all, they seem to be over-owned. And one more thing, regarding banks, people say, look, they are trading at a price to book multiple lower than what they used to trade at maybe 4 or 5 years ago. But to that, one has to also add the kind of reality or focus on the new reality that their book value growth or their advances growth in the recent 3-4 years has not been as strong as it used to be 4 or 5 years ago when they used to trade at much higher price to book multiples. I'm talking about, let's say, HDFC Bank or some of those well-known banks. So I think now we have to watch. They are well priced. Some of them probably are over-owned. Otherwise, there is no issue. I'm not in the camp that says, oh, because the US banks are suffering, you should just sell your Indian banks. That kind of transmission mechanism is not apparent to me. So there is a case to be holding these well-performing, high-quality banks.
Any sectors where you anticipate big declines in the stock prices? Which someone could look at exiting right now at current levels?
No, so there is this confusion. Those industries which probably benefited from COVID-related disruptions, and there they probably enjoyed temporary, supernormal profits. So it could be in the field of chemicals, it could be in the field of diagnostics, etc. That correction phase is ongoing, and there could be, weakness even after the price correction. There could be further weakness ahead. So one would want to wait and watch. Otherwise, the overall rubric of China +1 remains in play. But those excess profits, as they sort of reduce as time goes by, the price correction is already ongoing and it could persist for some more time. So investors would be advised to sort of take a take a more careful stance over there.
All right, Anil, that's been very useful, but we're going to leave the chat at that today. Thank you very much for joining us with your take on the market and all of these individual pockets as well. With that, let's move on and talk about what's going on.